Thank you everyone for joining us for today's webinar, Get a Grip on Your Cash Flow. My name is Fadi Rajdi and I'm the VP for Rhino Carbon Fiber. As you all know, Rhino Carbon Fiber is the leading provider of concrete strengthening and repair solution for decades. And as we always care about our customers adding value, and adding value to them is one of our main goal and priority. So today we're again honored to have Carmen D'Ambrosio, a professional EOS implementer. Let me introduce a little bit Carmen to you. She's a professional EOS implementer and serial entrepreneur. She started her career as an entrepreneur by taking over the family business at a young age. Throughout her career, she has grown, scaled, and sold several businesses, as well as has a laden career in corporate America. She now dedicates her life to helping other entrepreneurs gain traction through implementing EOS. So Rhino thought this would be very beneficial to all of us, especially during the COVID and this pandemic situation, to learn from Carmen how we can leverage our cash flow and cash generating while increasing current cash position. I'll give it to Carmen now, and I hope you guys enjoy this webinar. Thank you.
Well, hello everyone. Thank you so much for joining today. I'm really excited. This, albeit maybe is not the most glamorous of topics, cash flow, it is very relevant and so important. So the reason I picked this particular topic is it turns out there's been a big portion of my life and career that's really been determinant and affected by not knowing my cash flow. Starting running my family business, I'll give you guys a little snapshot of my bio, but I took over my family hair salons at a very young age, and it happened out of a crisis time frame. My father owned the business, and he actually passed away unexpectedly. And with that, I found myself in a cash flow situation because not only was he the glue that kept the company together, but here he was the #1 revenue generating person in the business, being a hair salon. So it became really apparent that we had to get a grip on our cash right then, immediately, and figure out how we're going to get through this crisis. Then my time at American Express in corporate America, I spent the majority of my career working with small and middle-sized companies on cash flow management, accounts payable integration, about DSO and DPO, and where to compress and where to be able to extend terms, etc. Putting full strategies together, negotiation between vendors, and really spent a ton of time doing this not only directly with business owners, sitting down belly to belly with our accounts payable, accounts receivable departments, CEOs, CFOs, putting these full strategies in place throughout my different promotions, unrolling different automated tools, and through some acquisitions, etc., that we rolled out to a huge 500-person sales organization and helping train them on cash flow. And then fast forward to not only all of that, I most recently owned a basement waterproofing company with my husband. After leaving corporate America, I joined back to the basement waterproofing company, and one of the very first things that I saw in the company was, at the time, the CEO, my husband, really got a grip on his cash by opening up the bank accounts every day at 5 a.m., as soon as he opened his eyes, and looking at what came in and what came out. And so many times I find that to be the case with entrepreneurs and with customers and clients. And if you find yourself in that realm, you are in good company, I will say that. And albeit it works, it's really not the most effective way given different situations that come at us, such as a crisis of COVID-19, or depending on where you live, winter months, things like that. Really just seeing what the end result isn't helping us be predictive and getting ahead of it. So one of the very first things that we did is we started measuring and putting on our scorecard and our weekly leadership team our cash flow. and actually having a strategy around it. Prior to that, it was bill comes in, it gets paid. We found that we were able to grow and scale our business that way by paying our bills as quickly as possible. And then vendors wanted to work with us. We got better pricing. And although that was great, at this point in our company, we had grown to a level big enough that we were able to put some strategy around it. Still got great pricing, but could work on terms and work on looking at what we could do by opening up our capacity to spend more, make improvements or capital improvements in our company. So we put some different processes and systems in place, which I won't go through all of those details today. Happy to talk to anybody offline on some of the success and not success, right? Because a lot of times we learn through mistakes as well as successes. So that's why this topic is relevant, and that's why I decided to pick it in one of our webinars to kick off this partnership with Rhino Carbon Fiber. So since selling our business, our basement waterproofing company, I decided to dedicate my life to helping other entrepreneurs achieve some or greater success than we did by implementing EOS. And so EOS is a system, a full management system put in place in companies with the concept and thought around all entrepreneurs and business leaders are focused on 136 different things every day and are running crazy, trying to keep up. And what we find with EOS and implementing EOS, by strengthening these 6 key components that I have listed on the screen: vision, data, people, process, issues, and traction, companies can stop focusing on all of the 136 things. Now we're focused on these 6 key areas and become 100% strong in this. Companies have explosive growth, not only to top line revenue as well as bottom line profits. They run smoother. They become crystal clear and harmonious alignment across their organizations. The company has vision shared by all. Everybody within the organization knows where it's going, what their role is in it. They have a cohesive, healthy leadership team helping the organization get there, which then creates crazy great culture. And they have what we call traction. That means the company is moving forward on the initiatives that they set out to do, getting stuff done. So the whole system is that, and with that, there are several different principles that fall in each of these categories. Today, we're only talking about our data component, which we find through scorecard and measurables. Today, we're going to focus on the cash flow piece of that, and we'll get going on that. So the first is, the agenda for today is how to effectively manage your cash. We're going to talk about identifying your specific 8 cash flow drivers. We're going to talk about watching your accounts receivable with new diligence. We're going to talk about managing accounts payable effectively. We're going to talk about manage your business based on a 13-week cash flow forecast, and I've got a sample there that I'll send out after the webinar for you to take and put into your business. Making contingency plan scenarios, cash planning, and recurring topic on your leadership team. And then quick cash injection, such as install of carbon fiber. So those are the topics for today. With that, let's talk about cash flow drivers. Most important thing about cash flow drivers is you want to think about it as the wheel on the car that makes your business go, right? We need to generate cash. So what I do when I work with my companies with implementing EOS, this is a common topic and it needs to be revisited on a regular basis with your leadership team. It needs to be called out and discussed. Number 1, how do you identify the 8 most important cash flow drivers in your specific business? I think we can all turn to a few of them right off the top of our heads, right? But what happens is I get my folks in a session room together and we get about 32 of them. Maybe, I mean, the highest we ever got was 45, but we get a lot of them up on the board. And that's too many to focus on a regular basis. What we need to do for your company is think about what are the 8 most specific cash flow drivers for you and your business. There's going to be a lot of overlap between a lot of different businesses, of course.
but think about it specifically for you. The next piece that is absolutely critical and always forgotten from the beginning, and it typically sits on the shoulders of the CEO or entrepreneur, is assigning an owner to each of those cash flow drivers. That's not necessarily the same person, the entrepreneur or owner, right? Who is responsible specifically for each of those drivers, and assigning that owner to it, knowing and they own it. This is what I do. I am responsible for driving this and contributing this to my business. The next is to set a goal to improve or maximize each of these drivers. I think we all are great about setting those revenue goals or those sales goals, which are absolutely cash flow drivers, maybe ancillary sales, maybe installs, something like that. But what we're not great about is looking at all 8 of them and setting a goal attached to each. So I show you this. This is a wheel, a cash flow wheel, as we call it. Some companies, you know, make up cute names for it. Some companies that I work with, they fill this in and they share it with their entire organization. Hey, these are the things that drive cash in our business. And if you're not doing something focused on one of these key areas, maybe you should, you know, reassess the activity that you're doing today. That's been effective. Not all companies do that, but just an idea or suggestion. But what's important here is these cash flow drivers that sit at the end of each of these spokes with your business and their cash flow in the middle are going to flow through, and it's very critical that they flow through to your budget, they flow through to your P&L, and they flow through to your company scorecard. Company scorecard is a seminar that we did, and we have another one coming up that get into some details around that. But it's being predictive and diligent about knowing where the company is going. P&L, we know that. We are great at taking a look at that on a monthly basis, where the company is in each of these drivers. And budget. This is something that I see about 50-50. 50% of my companies are really solid on putting a budget together, and 50% are a little bit looser, or a lot of it looser, we'll say. So having those 3 thoughts in mind as you're looking into integrating your cash flow drivers. So the most common cash flow drivers are price. So that one's easy and clear. And who creates that price? Oftentimes, who's responsible for it is the sales department, right? Because they're the ones out in your industry meeting with the customers. Now, maybe, you know, your CEO or integrator is setting the price, but oftentimes there's discounts available through, you know, different structures or promotions or things like that that you have going on in your organization. But at the end of the day, if price is one of your cash flow drivers, which it should be, chances are your sales department probably is responsible for that at the end of the day, or should. Another one would be ancillary sales. So this is those add-on sales. Again, probably likely that's owned by your sales department. That's going to be, you know, adding on additional straps for carbon fiber straps for preventative matters or different structural things there. That could be adding dehumidifiers or different things like that, adding in a crawl-space encapsulation with a waterproof, etc. Right? We know what the ancillary sales are. Now, you may have a stake in that in your production department as well. Right? Your foreman may have the opportunity to upsell, or your site supervisors, etc. Cost of goods, your margin. Somebody has to own this, but everybody plays into it, right? It's such a big piece of the business. Everybody plays into it. However, somebody has to own it. And maybe that's your purchasing department or your warehouse. Errors and mistakes. So this is a great one specifically in your industry, because oftentimes it's not tracked, but it's very costly. Some folks may have a service department, and that service department is responsible for the errors and mistakes and may have a quota around what they're supposed to be upselling on those service calls. Or maybe they have a proactive approach to service and they're selling service programs. There's so many different things you can do here around errors and mistakes that can turn it into profit generating, cash flow generating, as well as minimizing it from taking away from profit or taking away from cash flow. There's a lot of pieces that go into that, and that's probably going to be your operations manager taking ownership of that one. Service time. There's a lot of components in your industry around this, right? Is it the service time from the minute the lead comes in to the minute somebody calls them, to the minute a salesperson sits down with them, to the minute that we're installing, to the minute that we're collecting? There's a lot of pieces and parts there. Who owns that? Likely it's going to be your operations. However, it could be a different department in your organization, and something to really think about. Compensation and labor costs. So this one is typically going to be held at the CEO level or your finance department, CFO, if you have one in your organization. And I will say in our organization, we hired a fractional CFO where you can hire them for so many hours per week to come in. And it was absolute game changer for us, helping us put together meaningful compensation plans that were performance driven, which not only motivated and inspired our sales department, our production department, our service department, our managers. I mean, we wrote out lots of different programs, and this CFO helped us kind of put them together in a really nice, easy to understand, inspiring, motivating way that also drove revenue and eliminated just overhead costs. Next would be AR days. Are we tracking accounts receivable days? Oftentimes in this industry, other clients that I've worked with, it's, well, people pay as soon as the job is installed. Then that's ideal, and that's what we want, and that happens a lot. But does it happen always? And when it doesn't happen always, how are we tracking this? And are we on top of it? So this is something that we found. We thought we had a huge handle on it and that we were absolutely rock stars on this in our business. And after we dug into it and did a little research on it, we found how far we had fallen from where we thought we were. So our average days of accounts receivable was, we thought, 0 or 1 or 2, was really ranging in the 20s. And so we put some metrics and some goals around it and some strategy, right? We put a simple process around who owns it, how they own it, what that collection process looks like, with some deadlines and some reporting around it in combination with our accounting department and in combination with our site supervisors and sales department. And then we put some goals to shrink it by a certain period of time and by a certain deadline. We put some goals around shrinking how much outstanding receivable we had past 60 or 90 days. Huge impact. And then last one is general expenses. This is all of the things that you think it is, right? It's the stuff that is little nickel and dime you to death, or big things like salaries and benefits and taxes, right? All of it, it's the big things and the little things, but really putting a goal on it can make a big change and a big impact. Just putting some process around it can really affect your cash. So now we're going to move on to how carbon fiber could affect your cash flow in a positive way. And so I'm going to turn it over to Mike here to walk us through how specifically carbon fiber can be an effector on several of these cash flow drivers.
All right, guys. So as a lot of you guys that are on here know, the carbon fiber is going to be a pretty quick install. So your cash flow situation is going to be basically an immediate injection of cash. Most carbon fiber jobs are going to be, low labor cost. Material cost is a pretty good price point to get into as well. Your overhead as far as tools and equipment are not going to be crazy high either. So you're going to be able to go out there and do that job. Typically at the company I ran previously, we would have 2-man crews going out doing 25, 30 straps on a day. That's a pretty quick return on your investment there. And we always would use it as kind of an on-call situation or towards the end of the week to kind of give the guys a little bit of a break as far as the heavy duty work would go. So there's kind of the flexibility of being able to pull up the carbon fiber jobs into your schedule to fill in blanks or to bring quick cash into the business when needed. You know, there's really not a whole lot of opportunity for errors. We were pretty direct with how we created the kits that we provide to our contractors. They're designed that way. From my experience, from Luke's experience within this industry, you know, obviously material loss or errors is, you know, one of the largest contributing negative effects on your cash flow situation. So we really put a lot of thought and effort behind the kits that we designed to where you can hand that kit to your crew members. They can go out successfully install that material, knowing that everything that they need to complete the job is in that box, and there's not going to be any waste that's going to be involved with that. You know, important things like that are a lot of the times they're kind of overlooked. You know, rather than having a $5,000 roll of carbon fiber that gets left on the back of a truck by accident, it rains, and that's a $5,000 loss at that point. That's where the kits come into play. That was directly based upon our experience with some of the losses that we took because of just simple accidents like that. Anything else you want to add to that, Carmen?
What I love about the carbon fiber piece, I would say with us running our company, we absolutely loved carbon fiber jobs. There's so many pieces that it plays into: the margins, of course, the errors and mistakes, the compensation and labor costs, the service time, as well as what's not on here, which is the capital expenditures, right? It's cheaper overall to install these jobs because of, you know, the type of equipment needed and trailers and trucks and, you know, and dragging excavators, etc. Don't necessarily need to be part of these particular jobs. And that was huge as well. So definitely a great one. So let's move on and talk about a strategy around accounts payable. So many of the accounts and clients that I've worked with, as well as the company that, you know, I ran, as well as, you know, many different EOS companies, don't have a strategy around accounts payable, and it makes such a big impact if you do. So going into a COVID situation, you want to think about accounts payable as 3 main buckets, not 27 buckets, but 3 main buckets of the bills that you have to pay. You want to bucket those into your must pay. These are the businesses you have to pay to keep your lights on, to keep the doors open, to be able to do the work that you need to do. Payroll, taxes, benefits, critical vendors to operate the business. The next bucket is your strategic partner bucket. These are the ones that you have strong relationships with mutual interests. Certain suppliers, certain business services, these are your strategic ones that you can have meaningful conversations with. So your must pay, those are the ones week in, week out, we put them in and we have to pay them. The strategic partners are the ones that you're making phone calls to. You're talking to them regarding payment plans, different types of payments, such as, you know, maybe a credit card or a line of credit or something like that, using some of the cash infusion tools that we may have. You're also discussing with them different ways to partner with them. Maybe you can take business from another vendor that you're paying today and shift business to them for better pricing. There's all kinds of different things that you can be doing with these strategic partners. And then there's everyone else. And as much as I'd love to sugarcoat that the facts are the facts, there's everyone else. And in a COVID environment where we may not be having the revenue or accounts receivable that we had expected, you know, these are the ones that, you know, are the last to pay. So this is any vendor that can be replaced by another vendor. This is vendors that you can extend terms with, business services that you don't necessarily need critically to run the business. They're a nice to have, not a have to have. So what I have customers do is there's an easy way to export this out of any ERP system, any, QuickBooks or different system that you may use, and take them to your leadership meeting and just label them, either MSE or 1, 2, 3, label them as such and put them on an Excel file and just put a quick plan around it. Having that plan around it will flow into, in a few minutes, I'm going to go over the actual 13-week cash flow predictor, which this will be part of it. I'd suggest exporting that, putting it in a separate tab, and having that filter right through to that cash flow predictor so that you know at any given time what is going to be responsible. It's not a surprise like, oh my gosh, there's a $100,000 invoice due. I wasn't prepared for it. Now, how am I going to pay payroll? We've all been there, or if we haven't been there, we worry about it and we're up at night thinking about it in the middle of the night, especially in an environment like this. So just putting it down, pen to paper, and identifying who they are. Next is accounts receivable. Accounts receivable, hopefully your business runs on a 0-day accounts receivable cycle, but oftentimes it doesn't. Do you have a process around it? And do you have a system? Other folks are feeling the same way. If you're doing any kind of commercial work, you're definitely going to be on this bucket on the receivable. So what's important and critical to do on your accounts receivable is, again, export it out of your QuickBooks or whatever system that you're using. You put it on another tab of your cash flow tool, which is an Excel file that you'll receive. And you're going to delegate to whomever, who is going to be responsible for having these conversations, but communicate with every customer and understand the state of their business or the state of their finances. Obtain payment commitments or estimates from your customers. So if they can't pay you today, they've been out of work, they're in the restaurant industry, for an example, and they've been out of work for a long time. They haven't, been paid, so therefore they can't pay you your payment for the work that you've done. What is an estimation of when and how much they could pay you? Because really understanding that and getting something like that concrete so that you can run your business becomes absolutely critical. Review your contract terms and conditions regarding down payments, progress billing, and payments. So thinking about this, what are your terms? How can we enhance those terms with different customers and different vendors? So what I'd like to do is turn it back over to Mike again to talk about what Rhino has with some of its terms.
Sorry about that, guys. So we've always been kind of a pay as you go, at the time of order, pay to collect. During this whole COVID situation, we are kind of temporarily working with our customer base as far as, if you guys need a couple of days, or, if it's something where you need the material shipped and, the cash flow is just not quite there to where you can pay for it at the time. We are doing things kind of on a case-by-case kind of goodwill situation to kind of allow you guys a little bit of flexibility to go out and secure that job, get it installed, get the cash flow back, and then at that point in time, as long as we kind of have a pre-commitment from you guys as far as like a timeline, things of that nature. Obviously a lot of you guys that are on here, we've developed relationships with you over the last couple of years. So for the time being, during this whole COVID situation, we're kind of working with you guys a little bit in that sense to kind of help you guys, allow your cash flow to be a little bit more flexible as well.
So now I want to get to the fun but a little bit boring section, and this is a sample cash flow projector. So remember, we've got an additional tab on our Excel file that's got our accounts payable, and an additional tab on our Excel file that has our accounts receivable that feeds into this. Your accounting department can easily help you do this. If you're not comfortable doing it yourself, I'm happy to walk through this with you on a one-off situation as well if you need any additional support on it. But for this particular example, this customer has, you can see week 1, week 2, week 3, it's projected out. This is so critical to understand. This is not to be done really slowly and exact. This is a prediction tool. This is not the financial statements that has to be done absolutely 100% exact. It's more of a quick and dirty, get a feel for where things are and update it as things change, so that you can just predict, run your business and understand what's going on. And then once you get the data, you put the correct data in and continue to watch it over the 13 weeks. So in this particular case, this customer has $50,000 on week 1. Customer payments and loan proceeds give them another $35,000 for their inflows. That can be any kind of capital investments and PPE, financing, etc. can go in here. Outflows. Now we've got payroll. That's one you probably know a pretty good idea of what that is week to week. Benefits, suppliers, and that's where we're feeding in our accounts payable here. This is where it becomes so critical to feed this in and really see where putting your payment terms and staggering things could make a huge, huge impact. If one of your largest vendors allows you to change their payment terms, this could make a huge impact on what your cash flow looks like. And just putting it out for 13 weeks can really be game changing for your business. Rent, that one's easy one, that one. Loan payments that you have, capital expenditures. Is there additional truck that you need to be purchasing or a piece of equipment? When is the right time to buy that? You might want it this week, but the cash isn't there this week. So let's look out over the next 13 weeks when the right time to buy this and be predictive and really start scheduling these things out to understand where your business is. Credit card payments, etc. So in week 1, this particular customer was negative $14,500, which took their ending cash balance to $35,500. That $35,000 then populates automatically back up on week 2, and we go through the scenario again on week 2. Go through all of the different numbers. This is all feeding in. Then that populates back up. They were positive week 2 by $5,500. Week 3, $41,000 automatically populates back up, and you go through the scenario. So what it ends up looking like is this, and the chart and graph comes along with the report, and this is where business leaders tend to spend the most of their time, is here on the chart. What you want to do is set a goal. What is your goal that you're comfortable with cash inside in your business for your inflows and outflows? So often we don't set a goal, and the customer, the owner just says, I kind of feel comfortable if I have $500,000 sitting in all of my bank accounts. They might say something different, right? In this particular case, in this example of this customer, they wanted $200,000 in their account because that was enough for this customer to pay 2 months worth of payroll. What's your number? Discuss it with your leadership team, and as you predict it out over your 13 weeks, you can see where it will go and how it's going. Again, you're updating as you go. Don't worry about it being exact. You see in this previous slide, it's all round numbers. That's what we're looking for. We're not looking for exact down to the penny. We're looking for round numbers, a general estimation so that you can plan and track and watch this progression and know where you're going to fall short on cash and where the emergencies lie, and that you can easily take a look at some of those vendor payments or capital expenditures and push them into different buckets and places to make it work and you have the cash that you need. So what customers do is they bring this cash flow report to their leadership team on a weekly basis and just keep an eye on it, update it, and track it. Having that awareness to it will automatically track your cash flow, will automatically generate cash flow, excuse me. And setting a goal to it will make a huge impact. So in closing, the weekly leadership team should have a contingency planning piece. So if large customer does not pay this week, even though they're expected to, what are we going to do? How do we get through this? Can we push payments off or not? If we look at our must pay and our strategic partners, can we go back to those strategic partners and have additional conversations with them to make things work? So contingency planning and getting real with it, cutting through the egos and just getting real with where things are is what this is about. P&L scenarios, understanding where the business needs to be as it flows through to the P&L, putting cash flow on your scorecard, looking at it on a weekly basis and bringing it to the leadership team, and forecasting. Those are the things that should be put onto the weekly agenda for your leadership team. It's not a 30-minute weekly agenda item. It's not a 1-hour weekly agenda item. It's something that once you get it in place, it should be reviewed and maybe a 5-minute item on that leadership team just to keep everybody on the same page and aware of it. So that concludes the cash flow piece. What I'm planning on doing is sending everybody the tool, the Excel file for the cash flow planning